Welcome back, everybody. You got Will and I Man here from the Block Runner MetaZone Rovi and MScribe, and today we got a bubble forming.
Yeah, we do, don't we? You're questioning. So what happens when bubbles form, dude? Typically,
Well,
recall your childhood.
they pop.
Do they? Sometimes they don't though. They like rest on like surfaces,
Yeah,
and then they just kind of linger there for
eventually they pop.
a minute. Exactly. Some of them pop really quickly, right?
Right.
As they leave your little spoon or whatever it's called,
Yeah, the little thing.
the device.
Yeah.
This is a bubble generator. This one's called Wall Street that we're about to talk about, right?
Yeah.
As these bubbles kind of like leave, I don't know, per the conditions of the air,
Yeah.
where these bubbles land, that determines their longevity, right? So
Right.
we've seen a couple bubbles in our lifetime,
We sure have.
right?
We missed one when we were kids during the internet boom.
Yeah, but we became, power users
Power users.
of that
Yes.
technology paradigm.
Yeah.
And then, of course, I would classify,
ICOs was one.
like the 2017.
2021 NFTs.
These are bubbles, right? Meaning where
Yeah.
things they go through these lullish periods and eventually get to a over exuberant stage where valuations of things no longer meet reality.
Yeah, even Bitcoin can get overextended and it forms a local bubble.
Yeah,
And everybody's seen that, right?
correct. But typically, this is what you want to find. You want to find the next bubble. I feel like if you're an investor or you're just entertained by these types of financial events, like this is the show of all shows.
This is why you're here. Yeah.
This is why we're here. Yeah,
Yeah.
to find the next one. Why? Because if you position yourself, if you catch it early enough,
Yeah.
like literally as it's leaving the spoon, you get to ride it while it's just traversing through time and space.
Yes.
And then hopefully you exited before
the bubble.
the actual burst. Right.
Right. Right.
So that's
So-
what we're trying to do.
So yeah, today we're experiencing a new all-time high for Bitcoin, $120,000.
We're experiencing it, dude. How's it feel?
It feels expected.
So you feel nothing.
I feel nothing.
Nothing still, dude. that's gotta hurt, dude. Shit. Yeah, I feel nothing either, to be honest. I never did feel anything for Bitcoin, to be honest. It was just, I don't know. I just wear it on my T-shirt,
Yeah. I think the technology of Bitcoin is interesting, and I think its effect on like finance is interesting, but the price of Bitcoin is not as interesting.
Yeah, I totally agree. Yeah, I mean, it's numbers on screen, but we know Bitcoin is the driver of all things crypto-related.
Yeah.
But the coolest thing to feel about it is like, seeing previous years like predictions, I guess, come true. It's almost like
Yeah, that
seeing-
is cool. Yes.
Yeah, it's almost like seeing, Bible prophecies come true, but that might never happen,
Yeah, it hasn't happened yet, I don't think.
I mean, Bitcoin might be one of those prophecies, dude. There's somewhere in Revelations that talks about a one world currency, dude. It's right in front of us. This might be it. Right?
Yeah, I guess.
Just saying.
Yeah. All right, so we got Bitcoin, and then we can't forget about Ethereum. It's
Yeah.
at roughly $3,000, but
It's on the uptick. It's on the upswing.
yeah, the performance though is kind of meh, right?
Yeah.
Yeah, but to me, that signals opportunity.
Yes.
Big opportunity.
Yeah, we're gonna talk about that here in a second.
Mm-hmm.
All right, so we got a tweet here by Beanie. I think I shared this with you. I don't know if you found it first or I found it first, but I also found it interesting.
Yeah.
Wall Street has jumped headfirst into crypto by creating an ingenious 7-step flywheel with these treasury companies. So we've talked about treasury companies in the past. There's Bitcoin, Ethereum, and then there's these fringe treasury companies collecting all kinds of crypto assets.
Yeah. We talked a couple months ago. There was one that started acquiring freaking Tau from Bitensor.
Yeah, Bitensor, yeah.
Yeah, and then we're going about to talk about a new one here, accruing another L1 asset, right? So it's expanding.
Yeah. All right, so let's take a look at these 7 steps, right? Because it's sort of intuitive, but it may not be so obvious for people kind of getting exposed to this for the first time. So what you do is you find a stock that's left for dead. All you need is any major exchange listing as a shell, add a notable crypto native person in the team, stack the board of directors, nice combo of traditional finance and Web3 maxis for the total addressable market. Pick a trending crypto asset, bonus points for being a first mover on a new L1 narrative that hasn't been done yet, a la Bitensor.
Yeah.
Do a private placement for influential insiders to get in first before the public. Clout matters to retail. Announce a reverse takeover of the stock. Valuation does a 5 to 10x based solely on hype. That's the NAV premium, which is essentially free money for the issuer. NAV is net asset value.
So why is that free money?
Well, because once you acquire that L1 asset and you do a public sell on it as an instant 10x just because of the narrative and the hype, right?
Yeah, a new participant has entered the arena, right?
Yeah, and we've seen this already happen with BitMine.
Several times,
Yeah. So sell shares, number 6, sell shares on the newly inflated valuation. This is simply cashing in on the NAV premium the market decided to assign the stock, and then use these funds created out of thin air to buy a targeted crypto treasury asset, rinse and repeat with constant secondary sales, and buy more and more. The result, in the crypto asset rising in perpetuity parallel to the stock price of the treasury company, the stock price keeps rising as the crypto asset rises, and more shares are constantly sold to buy more crypto assets, which accentuates the price action.
Yeah, I think that pretty much masterfully breaks down what it is we've stumbled into.
Yeah, and I would qualify this 7-step program here as like the base level activity.
Yeah.
Right. The next level is like let's say you leverage Ethereum and you start adding DeFi products on top of that, so you can generate some revenue, which
100%.
buys more ETH.
Which we're going to talk about here soon. Why we haven't seen more of that yet? Because there's some regulatory prerequisites, I think, before a lot of these shell companies start to feel more confident in that approach and that strategy. Because, you're right. It's at some point the market may not appreciate just
buying the asset
strategy and give it that premium that's needed to fuel the engine of constant purchasing of the base asset, right? Agreed. At some point, so the market's going to be desiring something bigger, right? Hey, maybe revenue's hard to do, but yield is not if allocated to the right vehicle.
Yeah. All right, so we were talking about shell companies. Take a look at this. Sonnet Biotherapeutics, right? It's announcing an $888 million business combination to launch a hype cryptocurrency treasury reserve strategy. Hyperliquid.
Yeah, we talked about them. It's another L1 that started off as a perpetuals DEX, right? Mm-hmm. Tremendous performance so far. It started off as a giant airdrop to its core users, like literally 10x from there after the post airdrop, and it's one of the top 25 cryptocurrencies now.
Yep. Yeah, so we got another shell company acquiring Hype, and all right, so then we had a conversation with Grok 4.
Yeah, because we're seeing a continuation of what we suspect is like bubble-ish activities, right? The fact that this is expanding beyond just Bitcoin and Ethereum, now it's trickling to other altcoins, other ecosystems, right? So you can kind of extrapolate from there. It's not going to stop at Hyperliquid.
No, definitely
It's going to keep going down the chain of alts, and there's plenty of dead companies that need resurrection.
Almost all the companies are dead.
They're going to keep dying as AI continues to progress, right?
100%, yes.
And outperform humanity's capabilities.
Yes.
So it's like, what do? Oh, we just partake in this new speculative wave.
Yeah. Right? So this pattern that we're seeing, have we seen this pattern before in history? And it turns out we have, in the form of bubbles. Can you break down the timeline of events within the .com bubble? Detail the stages of the market growth and early to middle to late stage. So we got the introduction of the .com bubble, but here are the stages, the early stage, the mid-1990s emerging and initial growth, the 1993 to 1996. Mm-hmm. So this is the equivalent of, let's say, 2017 to now, where this was pre-regulation of the internet.
Yeah.
Where the companies were trying to kind of figure out like their footing on the internet and how it was going to be financialized.
Yeah, and it's kind of like where the killer app development arises, right? Like, Netscape being like the killer app moment for the internet, where people started to understand the implications of that. Like, we've had a couple of those with NFTs, stable coins. There's been like iterations through previous cycles that have proven that this sector of technology can provide some sort of killer app service. The same way, like, these web browsers enable the proliferation of information for human beings and such, right? So So that's where we've been up until now, right? Where we've been, like you said, figuring out the footing of the industry, essentially. That what are we going to bring to like institutional investors once we're ready? Right?
Yeah. Yeah, and then so we transitioned to the middle stage, which is at the late 1990s, so 97, 98. So this is right before the bubble really starts inflating and then popping. So by this point, the new economy narrative took hold, emphasizing growth and profitability. Companies adopted a get big fast strategy, burning through cash on marketing and expansion to capture market share. Speculation intensified with media coverage amplifying optimism.
See, just focus on that line alone. Is companies what were they doing? They're overspending, getting big fast. The strategy was to burn your cash to claim market share. And the equivalent of that is literally burning your cash to claim market share of the available base native crypto asset that they're all kind of gunning for.
Yeah.
It's the exact same practice, but a different like model and mechanism, right?
Yeah. So totally agree. And finally, the late stage, 1999, 2000. So this is peak speculation and a burst. And so what do you know? Then in March 10th, 2000, NASDAQ peaked at $5,000, more than double its 1999 value. So it doubled in about 2 years. Or no, 1 year. It doubled. And then Barron's published an article warning that many internet companies would run out of cash. And then MicroStrategy's revenue restatement caused a 62% stock drop, triggering broader sell-offs.
Yeah, so that's crazy. I didn't know. Literally, the top of the dot-com bubble was ushered in by none other than MicroStrategy, the one who is I'm bringing in this next bubble into the market.
That's right.
It's pretty wild. It's almost like another evidence of simulation, perhaps. I don't know.
Yeah, it could
maybe
be.
Michael Saylor's
he knows, dude.
He's just some force out there, right?
Yeah.
But it's interesting. So, yeah, like the 97, 98 period was much more. Was that what it is? 97, 98? Or no, 98, 99. The mid stage.
The mid stage, 97, 98.
Yeah, this is where the critical regulations were coming in, and like the big IPOs were happening, which is what converted a lot of Wall Street's probably initial skepticism into more of like fervor, right? Like we need to get involved, we need to accelerate this because it's a money making machine, right? I feel like that's where we are.
Yes.
Literally today, we have this week apparently is crypto week at the White House.
Yeah.
There's like rumors circulating that Trump is going to remove capital gains tax requirements for Bitcoin. I don't know if that's true or not.
Yeah, I would bet the under on that, but that would be cool.
Not just cool. That would be like massive.
Yeah.
Like the catalyst of all catalysts, I feel like.
Yeah.
And I feel like there's a small chance just because of how positioned, the Trump regime is in all of this, right? I mean, could be.
Yeah, so we were talking about the middle stage, which we're saying this is where we're at right now in crypto, 97, 98.
Yeah.
And we were saying that in this middle stage, regulation was being passed through kind of to support internet companies.
Correct.
Right. So let's take a look at this tweet here. It says, by Leo, welcome to Crypto Week 2025. Congress is fast-tracking the biggest crypto legislation ever, the Genius Act, Clarity Act, and the Anti-CBDC Act.
Mm-hmm.
So let's go through some of this stuff. The Genius Act must be a one-on-one backed cash, short-term treasuries, public reserve disclosures, bankruptcy protections, choose federal or state license, and not a security. The Genius Act, massive win for Ethereum. Congrats, TJ. Why?
Claps for TJ.
Yes, thank you very much.
Firm handshakes all around, dude.
Why over 60% of stablecoins live on Ethereum? Once Genius becomes law, it's not just some crypto coin. It's regulated digital dollars moving trillions on ETH rails every day. ETH, digital oil powering the dollar. Congrats, TJ.
Yeah, we've
Finally,
been waiting on this day.
It's coming, dude. The horizon's here.
The next one, Clarity Act. This is the death of regulation by enforcement. It draws a line between fundraising equals securities and SEC, Securities and Exchange Commission, and then live token is equals a CFTC if sufficiently decentralized. So ETH, BTC are commodities by law. No more guessing if you're a criminal for holding tokens.
So that's why. So just this alone is what's inspiring this institutional sentiment around Bitcoin and Ethereum, right? It's like there's a race to acquire these things and bring them into your balance sheet and have them in your possession because it's no longer this gray territory. It's pretty much expected that these are going to be very much hard assets that are going to be factored into like the macroeconomic picture moving forward. Right?
Yeah, and Bitcoin being a store of value and ETH being the rails of the future of finance, that's kind of what you want to hold as assets.
These are very powerful narratives, right? And they're
Yeah.
starting to seep in, but it goes even further, right?
Clarity also says self-custody is your right. DeFi code plus validators equals not regulated.
That's another big one because this fosters in like what I think will be the next wave, right? Where yield generation becomes kind of like the bigger narrative, not so much like the compounding ability of, executing on inflated NAVs scores to self-perpetuate like the expansion of this. You got to add another pillar, which is because DeFi and the network support of validating proof of stake chains like Ethereum, you can now become participants in that. You don't have to like move your hard assets around to partake. There are institutional facilitators that can protect your assets, remain or keep that security, and you can still get access to that.
Yeah.
And I think that's going to contribute pretty massively into like the continuation of this.
Yeah, especially for companies who are Ethereum Treasury companies, they can actually leverage the network of ETH to add revenue to their bottom line. So exchanges must segregate customer funds, and projects can raise with tailored disclosures. SEC can't just sue everything, and it gives crypto the rules of the road. And then finally, the Anti-CBDC Act bans the Fed from launching a surveillance coin, no retail accounts, no programmable USD, no expiration dates, no dystopia, privacy wins, digital dollar, state private sector.
Yeah, so that just means, companies that do their due diligence to become licensed to issue their own stable coins, they're going to have a massive advantage as far as like access points for, the market, right? So all these are just insane ingredients for, again, what we're witnessing today is the beginning stages to get like the sentiment on board, everyone's appetite.
Literally 1997, 98.
Yeah.
Before the bubble burst in 2000.
Yeah, and then all these regulations give broader permissions to essentially extrapolate from there and create different layers of complexity on top of this, like DeFi strategies, potentially even a new wave of like ICOs, so long as they're following the right, whatever's, but that introduces a whole new sector of new entrants into this pool.
It's true.
Like things can really fester from here, right?
Yeah, so together these bills supercharge stablecoins, open the floodgates for tokenized assets, invite traditional finance to build in public, push Ethereum to the center of U.S. fintech. Congrats, CJ.
Again, we're just winning.
And then protect individual sovereignty. All right, I think we're done with this. Let's continue on here. Beanie says, most of the generational wealth in this world has been achieved by those who have identified a bubble forming early and rode it up with conviction, but also smart enough to know it's a bubble and not left holding the bag.
Right. Yeah, so that's one of the, so I have personal experience with this, 2017.
Yeah.
I knew it was a bubble, right? Remember when you came in, I was like arguing with you. It was like, dude.
Yeah. I misinterpreted what you said, what you meant by bubble. You meant like a financial like bubble versus a technology bubble where,
No, I was like, this is a market bubble, dude. Meaning like you're coming in at the top. You probably should reevaluate your entry points. I was like, this thing's about to come kaploozy down on its downward spiral, dude. It's like it's any minute now this thing's done.
Yeah, and I was arguing. I was like, no, Bitcoin's a big deal.
Yeah, it's like it's only going to go up. But you were right. It's only gone up since then. But in the short-term horizon, this bubble is actively in its popping stage. So
correct.
What I did, though, I made the mistake of holding, through the bubble.
Right.
Which, no. The mistake I made is like trying to catch falling knives, really. Holding is not that bad. If you would have like just bought and held Bitcoin.
Yeah.
But a lot of these altcoins, if you bought and hold them back in 2017, all these ICOs, they virtually went to
nothing.
Zero.
Yeah.
So a lot of these companies that partake in this new wave, they will have exacerbated valuations.
Mm-hmm.
Tremendous, right? It's gonna appear as if you're investing in like the future of finance.
Yes.
But 99% of them will just be vapor.
Yes.
Just you got to be aware of that.
Yeah.
Right?
Yeah. And so what does this turn into? It's essentially micro strategy should be trading at a 10x MNAV, at least 10 to 20x if we're in the middle of the bubble. And so long story short here, can we confirm whether this is correct? So we asked Grok, it's like, what do you think of this analysis? And it says, in summary, the tweet's logic is sound if you buy the Bitcoin's hyper growth story. If not, it's not absurd as precedent exists. So essentially, because we are approaching a bubble, we're going to see some craziness. Craziness that right now, MicroStrategy is trading at a 1.5x.
Yeah.
And so in the middle of the bubble, it's trading at 10 to 20x.
Mm.
And so even though MicroStrategy is a blue chip in the context of Treasury companies, you probably want to sell it at a 20x valuation.
Or at least at some point
Yeah.
along that curve, because, he breaks down here that there's, this is already like a frothy market in itself, right? There's already, probably tech stocks that are overvalued. Costco itself trading at 55, its P&E ratio, right?
Yeah.
55 times, is that what it says?
Yeah. So you're not going at MicroStrategy when Costco is trading at 55 PE.
Yeah. So he's kind of painting the picture here is like, if everything's a bubble, then this new stuff that's coming into the market will also, it should feel as bubbly-ish as like other things that already exist, right, in the market, right? And some people might feel we're already there, right? That's why the people are having this conversation. Like, is this already the top? Like, how much more of this can we see? Is it 1 month of this? Is it 6 months? Is it another 2 years? Who knows?
Yeah.
Right? But yeah, I agree. I don't think we've seen the silliness yet completely.
No,
Yeah.
not yet.
Yeah, I think this is going to get much crazier. And then the other question to ask on top of this is like, okay, is this only going to be an institutional phenomena?
Mm-hmm.
Or is this actually going to seep into retail one way or another?
Well, I feel like if we go back to the internet bubble, that wasn't just an institutional phenomena.
No, at some point, retail, like
Yeah.
at the very end, retail got access.
Yes.
Right? They started to hear about this. Everybody was, through word of mouth, like, you got to start buying these
Internet companies.
these domain companies, dude.
Yeah.
whitettshirt.com.
Pets.com. Underwear.com. Yeah.
Yeah, dude. Freaking stapler.com.
Yeah.
Whatever, dude. Just get into them because they're printing.
Yes, that's right.
What you have to do is like open a brokerage account.
You're right.
Or, like freaking rotary phone. I want 600 shares of that one.
Right.
Good sir.
You had to make the phone call.
Radio, mate. It's like, cheerio, have a good day. I'll put that order in right now.
Right. Yeah, I wonder how that worked. When you had to make these phone calls to buy these stocks.
Yeah, they're probably like, damn, this internet shit we're speculating on better work.
Yeah.
Because this sucks, dude.
Yeah.
So it's happening again, right? But luckily we've got the internet, right? So the rails of access are far greater than what they used to be.
Yeah, and the key word is that because we have the internet, this bubble will probably burst in half the time that it took the internet bubble to burst. Half the time. So
why do you say that? What does that mean?
Just because internet makes things faster.
I see.
Yeah.
Yeah, I think that makes sense. So like after the inflection point of the dot-com bubble, it was like 2 more years.
2 years, yeah.
So I think a year, I would say, like, once the MNAVs start to get above 5 to 10x,
yeah,
and that's like common.
Yes.
People are like okay with that, and Bitcoin is like traversing into the orange to red territory.
Yeah,
we got to start reevaluating
time.
Reality, and hopefully we are like going to be there and like sounding some alarm bells. Hopefully we don't get mentally captured by all this.
It's like, this is normal. It's like
this will never go down.
10x. Yeah. All right, that's it for us. If you guys find anything in the crypto space or even the treasury space that you find interesting, please put it in the comment section below. Other than that, appreciate you for watching, and we'll catch you in the next video.
Peace.